and gentlemen, QQQ Traders Club, welcome to the market update. Let's continue with our analysis here, and we'll start with the spider as we do every week, and the Qs, diamond, and the analysis today with the Russell 2000. Hope you guys are staying warm this week. Hope you guys had a good time. I had some good luck trading this week, and obviously market did see some good breakout this week with the recent shenanigan gap up and down moves here we saw earlier this week. We talked about there was about 4 island reversals, and so that's the shenanigan I'm talking about. It just, if you're so concerned about short-term movement, market is gonna make sure your head is spinning. So I really didn't care for it. I don't care. And something I said last week, it doesn't matter what happens in the short term, we're gonna get higher. We're gonna go higher either way. And so, well, when it's all said and done, we did see that kind of a bull pennant pattern playing out perfectly here. There's a lot of up and downs in the short term, but definitely a textbook bull pennant there. And we saw 2 days of bullish run after that. And we're pausing at that 100 SMA. 100 SMA did act as resistance here at these levels, October, November, and December, right? So bulls trying to bring it back up, got rejected. Trying to back up again, got rejected. And this time, this thing tanked, right? We V-shaped higher, and I think a lot of people are waiting for a retest. And I think if there were gonna be any kind of retest, it would have been here at 247 when we saw that gap down. Well, actually here, that was a gap down there. And it would have been here. Instead, bulls gapped it right back up here and brought it all the way up. And at this point, when you look at this chart here, bears have lost a lot of its real estate. You know, if bears really want to bring this thing down and really make it into a bear market with a downtrend in the primary term, I think they should have at least protected this level. I mean, yes, they gave up. They gave up the neckline, right? This was a neckline. That was a prior support. That's what you call neckline. So when you track head and shoulder formation, a lot of times what happens is it comes down, it retests a neckline, and then you see another series of lower highs, another sequence of lower high. So then we continue to see lower highs and lower lows. And then I think after that, this was important horizontal pivot, because that was a level. There was a lot of battle was going on. Once that battle was depicted as a winner to bears, that's when we saw this thing coming down super fast for about 2 weeks. So this was the level of a battlefield right here. And this was almost like the gate. You know, basically bulls are knocking in that gate where bears came in, brought it down. And you can see how bulls are able to bring it right back up here. So right now, technically, we're still in the vicinity of lower highs, right? This is a high, this is a lower high, and this could still, we can still categorize this as we're in a vicinity of lower high. We don't know yet as of today if this is indeed a lower high. Only way we can have to see that's a lower high is this coming down, making all the way down to make a lower low. Then we can say, well, that obviously was a lower high. But for now, we don't know if it's a lower high yet. We are, however, in a territory, in a vicinity of lower high. And something that I've been talking about last couple of weeks is that we're not going to go down all the way to these lows at 233, 235 or something like that to retest the lows. We're not going to see that happening. Especially for the fact that, well, we're now up 17% since the lows, or 16%. We're only, what is it, from here to new all-time high? 8%. I think on the Dow, it's only 7%. We're only 8% away. 8% away. And can you imagine that? I mean, as of today, we're at 270s. We're where we were back in October 11, before this massive panic and this, you know, before so many of these bears and all these scared people are thinking about potentially a recession or bear market starting. I mean, we're basically here after just about 3 months later. That's where we're at. And how many people really thought that there was going to be a recession or bear market in 2018, October 2018? I think a lot of people are still very complacent at that moment. I think in October 2018, yeah, we did see very, very fast decline, but given the fact that the market has been very, very strong since 2016, well, we're probably going to gap back higher. I think that's what a lot of people are thinking. And so the market kind of gave us this to kind of flush a lot of those people out and to create more fear, right? So then we saw this, and something I've been preaching and something that I've been predicting since the early part of this year and late last year, you know, that we're going to see these V-shaped move higher, and we're probably going to see a fast recovery. And then something I've been saying is we may see this thing continuing higher, and that's what I've been saying for a couple weeks, several weeks now, right? In this fashion, where we're going to see these short-term pullbacks, short-term pauses, short-term shenanigans, short-term resting patterns, and continue to move higher. And that could possibly happen, you know, best case scenario, all the way to 300. But I think, you know, there's a good chance that this thing continues to fill this gap. There's a tiny gap here, 278, 280, and we pause there a little bit. And I guess once we get there, 280, I want to figure out if we're going to go here and then kind of pull back and get into this symmetrical inverted head and shoulders. However, when we do see inverted head and shoulders, it's too easy for many people. It is too easy for people to look at this and say, you know what, this is probably a good level to start buying it, or let's say if this thing kind of gets back up here. And a lot of people say, well, that is definitely inverted head and shoulders. And then CNBC start talking about it, and the market did not like that when everybody started talking about it. And then there could be some more shenanigan happening here. I actually rather, what I'd like to see, doesn't mean it's going to happen, but what I'd like to see these things is keep on going higher from here. Maybe some pauses at 280, some maybe pullback, maybe a week or two, right? Maybe some shenanigan like this, and then continue going to 300. That way, market is leaving many people behind. A lot of cash, people who went cash with losses, it was 250-ish. 250-ish is a level that most people, most even long-term guys that you may follow on YouTube, they gone cash, right? And right now, they're just sitting there watching this thing resolve to the upside, still wondering if this is gonna be like 2008 or 2000, right? If this is gonna be like 1945, or is it gonna be 1973, right? They will give you a whole bunch of charts, right? Like, oh, I don't know, massive confusion, right? I think the market, because market already given you this super fast quote, it only took 3 months, 1 quarter, and we came down 20%. Did I tell you this statistic last week? I don't think I did. So basically, we've never seen in 1 year, right? We saw about 11% correction, and in that same year, we saw 20% correction after this thing consolidating about 6 months and then making new all-time high. In 1 year, we've never seen this sequence ever, and we've never seen. I read the statistic where this is the first time you're seeing more than 10% decline happening twice in 1 year, and they're saying something about like there was about 95% chance that this wasn't gonna happen. So basically, the odds for this to happen, because obviously, you know, when you're trading the stock market, it is a game of what? It is a game of probability, not certainty, right? So there was about 5%. Let's be generous. Let's be conservative with that. There was about 5. Let's say 10%. There was about only 10% probability that we're gonna see something like this, right? So this was a very quote unquote unlikely situation. Unlikely situation, very rare, right? Unparalleled, unprecedented event that we have witnessed in 2018, right? So right now, a lot of people are thinking that even this is a very unlikely situation, because a lot of times when you see a steep decline like that, you usually see double bottoms. You usually see a retest of lows, and that's what everybody was saying in early 2019. Don't you guys recall? I'm sure you follow people. I'm sure you watch stuff on Twitter and YouTube, right? These guys are saying it's very, very unlikely we're gonna go straight up. We're gonna retest of lows, and a lot of people are waiting for that. We saw unlikely scenario pullback. We're gonna see unlikely scenario move to the upside. That's what I'm thinking. That's kind of what I've been saying since early part of this year and late part of last year. So, this actually became a tremendous opportunity. People who knew what they were doing. Obviously, at these lows, I was able to accumulate more longs, and they've been doing really good. And I think the market is going to continue, right? Is going to continue shrug off is some of these resistances and could continue to move higher. And recently, I talked about this 100 SMA, right? And I talked about here comes the 100 SMA. Right, and prepare potentially for short-term turbulence. So short-term turbulence, obviously, we did see short-term turbulence here. So that's kind of what I'm talking about. I think in the minor term, worst-case scenario, we can come down and kind of retest some of these levels. 165. Maybe the worst case scenario, we come and fill this gap that we have at 263 and 262, and possibly even retest this neckline, right? You can see this neckline here. Maybe retest that, maybe and then going higher. If market really wants to hype up the bears and maybe create more fear, maybe come down and throw a little bit of head and shoulder formation, right, in the short term, and that this process could take another 2 weeks, maybe 2 weeks, 3 weeks, where they're gonna take a banner and say, aha, look at this, left shoulder, head, and a right shoulder, and then go higher. But again, I'm getting too ahead of myself. But those things are a possibility. I could see it happening. But I think we may continue higher with the short-term bull flagging, bull pennant type of pattern. Retest of lows at 234, no, that ain't happening. But potentially we could come down, retest 263, 262, 265 area. We may see some consolidation here at 100 SMA, or we may just blow right through it. But either way, like I said last week, we're going to continue to move higher, and I think there's a good chance it's going to continue to go at 290, 280. And most people gonna think that it's safe to go above 280. Trust me, it's not gonna be. You think any area is quote unquote safe. You know what I mean? Especially if the market just went straight up and made about 60%. By the time it gets to 280, guys, that's 20% move. You know what 20% move is, don't you? 21% move when it gets to about 280. 20% move is pretty much one whole year of move happening in 1 to 2 months. Pretty much all the move has already happened. Once we get above 280, around 290, market is going to be lethargic. Though I do forecast that we're gonna have 20 year to date, and by end of this year, because year to date we're only up 8%, right? But I'm talking about since the lows. Majority of move already happened, and this is what happened. This is what I'm talking about. Majority of market participants, including your gurus and teachers and whoever you follow, all these wannabes, right? Including those people. Majority of market participants, when they think it is quote unquote safe to go long, they have missed out majority of move, and now they have to face the real volatility. You guys know what I'm talking about. I talked about this before over and over again, right? Many times, that's what happens in the market. Smart money always get in at some of those levels and able to participate in this big move. And then when public starts to get into it, right? Because they're scared, they want to find quote-unquote safe area. And then what happens is once they start getting in, that's when you see real shenanigans. We're not talking about these short-term pullbacks, man. We're talking some 5-6% up and down swings where it's going to make your head swing. And your head swing and spin. And there's going to be a massive panic happening. That's what happens. Anytime when there's a public start getting attention, it doesn't matter where it is. You could go to Walmart in a Black Friday, Black Friday sale, It is chaotic, volatility everywhere, right? I mean, have you ever gone to Costco? I don't know wherever you live, but you go to Costco on Saturday or Sunday. Oh my, I'm like, where the hell these people come from? It is chaotic. It is crazy. So do you know when I go to Costco? I go to Costco on the weekdays. Not even lunchtime, because you go on lunchtime, there are people coming in for lunchtime to eat stuff and buy stuff. There are a lot of people. You go there like around 10 and 11, that's a sweet spot. When nobody's there, you can truly enjoy ride in Costco and buy whatever you want. There are a lot of people. You don't have, you know what I'm saying? That's what I'm talking about. Same thing with the market. This ride for me truly was pleasant. Truly was, pleasing to ride this ride to the upside since the early 2019 or early January of this year. But man, I know, and I think, and even this recent move was pleasant, but I know once these people start coming in, there's gonna be shenanigan happening. I'm guaranteeing you. A lot of cash people are suffering because they are just watching this and not able to participate. Trust me, full blown, you close out all of your positions. There's no way you're gonna start you can get back in after this thing already made 16%. You know, this thing already made about 16% move, and we're only 8% away from all-time high. You know what I mean? And if things get to 280, that's even worse. Because after 21% move, well, when are we going to pull back? And so I think with that psychology, unlikely scenario is likely to happen. Unlikely scenario is likely to happen, right? So let's watch 100 SMA. Let's see how much it pulled back. We do have a 50 MA and 20 MA and 10 MA hovering in that vicinity. Potentially retest of 50 before going higher. So we'll kind of follow up on the next week. Q's done very well here. We actually saw another gap up. So if I actually do this, there's a tiny gap here, and then there's a big gap here. We're well above the neckline. This is a neckline, right? We're well above the neckline now, right? Bulls or bears have lost a lot of its real estate, right? And then now we have 100 SMA in this vicinity as well. 100 SMA did act as resistance, but we're seeing the 50 climbing higher. We've seen 20 already been climbing. And so there's going to be potentially some short-term turbulence. But these tiny gaps here should provide some support, should provide some cushion should the price see some decline in coming days. Let's go to diamond. Diamond, same thing. Diamond also. This is a neckline. We've been tracking this neckline for a while now, right? We're well above the neckline. Look at the diamond, right? Diamond is actually only 7% away from new all-time. Only 7% away from new all-time high, right? So around 7% away. We're pretty much where we're like, back in August of 2008. That's where we are now. I mean, that's how fast it moved, and I think it's going to continue higher as well. We're just hanging around here. The difference with Diamond and the Spider is that Spider, I think 200 SMA is still hovering down like this. On the Dow, 200 SMA is actually sideways. So look at here. On the Spider, actually 200 is sideways. It's not declining. But we are still, 200 SMA is still above current price. But on the Dow, we're just kind of right at that level. And 200 SMA is definitely just moving sideways. And same thing on the Spider as well. So the 200 SMA is not declining. We're moving sideways. So the 200 SMA sideways definitely tells us in the primary term, we're still in a sideways market. We're not yet in a bear market. And obviously, I've already concluded the fact that we're not in a primary term bear market. You can say that we're in a downtrend, the minor to intermediate term, but long term obviously we're not. But the market, this recent move, for this to completely nullify this potentially these lower highs here, and that's kind of the resistance that we're seeing right now. This thing getting up here and start cultivating higher lows. That's what I'm saying. And so that's kind of what I'm waiting on, what I'm looking at, and trying to figure out where the next pullback is going to be. So also the gap up here is still sustained, and I like to put actually a little bit of line here because I think this is a strong support because you can see that little doji here. Let's zoom in here on the Dow because there's a lot of shenanigan here. You see that doji? I mean, that's what you call on the diamond. This is what you call this doji right here, evening star reversal, evening star. So there are a lot of like this. Closed there and then gap down here and then it flushed, got back up. We gapped up here. You see this closed here. There are a lot of gap action. We saw gap up here, gap down here, and this is what you call either, you know, the Steve Leeson's book, Japanese candlestick charting technique book, call it abandoned baby, right? Abandoned baby, or it's also an evening star reversal. And with that pattern, we came down, but we got back up instead of continuing lower, right? We gapped right back up. I think that's also a rare situation. I don't know if I've ever encountered a sequence like that where we see a abandoned baby or evening star reversal and then we just gapping right back up. Because we already saw back-to-back gaps. We saw gap here, we saw gap there, we saw gap here, gap, and then another gap. Gap, right? So we've already seen some unlikely scenario happening in the short term. I mean, even this gap here, this thing gaps down hard and flushes it down, 2.3% down there or something like that, but it gaps up next day and thrusts it above the gap. A lot of times when gap gets filled, it does act as resistance. This time it just pushes right through. So we've seen unlikely scenario of this downturn. We're probably going to see unlikely scenario upturn there. Let's look at Russell and let you guys go. Russell 2000 is tracking well here. We're now back above 50 MA, 100 SMA in that vicinity here. And Russell 2000, this is an important level, I think. And potentially we continue higher and fill that gap. And again, perfect world, that would have been very, very pretty. Left shoulder head, right shoulder, and then a neckline. But again, market will never give you perfect setup so you can, or perfect level, or quote unquote safe area to go long. Probably not going to give you that this time around, though. If it does give me, then I think that could be a good setup, but I actually don't want to see that because that's when everybody's going to be talking about it. Everybody's going to be trying to use this setup to maybe gap back long. Maybe market knows that and market might not give you. What I like to see is this thing actually thrusting higher, coming all the way back here, and then pulling back, and then going higher. So kind of throw a lot of people off. A lot of these impatient people, they're probably like, where is that inverted head and shoulder? Where is that pullback? And they might think, well, this thing may never pull back. What if this thing go like this forever? And then most market participants start chasing it. That's when the market is going to pull back. And then it's creating some more fear and then possibly go higher. But again, we'll kind of, let's take this week by week, and then we'll follow up next week and see how we play it out. And obviously, you can follow me at 2K Kim on Twitter, and I kind of generally give some comments here and there as I deem necessary. It's not like I tweet every day, but when I see that there's certain things I want to share, then I do share this. You can follow me there. But you guys have a wonderful weekend, and good luck trading next week.